All right, we are live. Welcome back to this week's trading live stream. Today, as always, we'll be going over the indexes, the recent market action, taking a look at Tesla, Amazon, Google, Apple, many of the mega cap stocks that look kind of the weakest in the market at this point. Quick overview of market leadership. I have 12 stocks that I continuously kind of rotate stocks in and out of that to keep a pulse on the potential leaders in the market. And then have about 10 or so stocks, setups long, 10 or so setups short that I'll be going over. Once we wrap that up, or in between, if you ever have any trading questions, drop those in the comments below. And if you have any chart requests, you could drop those in the comments as well. Before we start, this live stream is sponsored by MarketSmith, which is the trading research platform that we're going to be using to break down each of the indexes, stocks, and any trading questions that you guys have. So if you guys enjoy the platform and want to give it a try yourself, there's a link in the description below. Two announcements for this personal channel. The first one, I'm really excited to announce that I'll be doing the US Investing Championship next year. So 2023, I'll be trading and you guys can see my results, all that good stuff. This is something that I've wanted to do for a couple of years now. Since I saw Leif win it in 2019, I knew I wasn't ready to compete in 2020, 2021. Even this past year, I am up this year, but not anything crazy. And I think just 2023, this is going to be a great experience for me. So I'll be doing less on the YouTube channel of potential watch list stocks and more just general trading education because I don't want to give away the stocks that I'm actually trading real time. But I will be still on YouTube pumping out educational content. And that gets me into my second announcement, which is one of my friends, Andrew, if you're seeing this, he is getting interested in trading, and he's got really interested in sports gambling and sports betting once it became legal in our state. And I was like, well, that's not really scalable, Andrew. Like, let's talk about trading. And we talked for about like 2 or 3 hours one night, and he has decided to commit to trading. So instead of sports gambling, he's going to be learning right from with basically zero knowledge on the markets, but he is a very good learner. So first thing I did was I gave him my How I Made $2 Million in the Stock Market by Nicholas Darvis. He read that in one day. He loved it. We had our first trading lesson, just what is a stock? How does price action get created? What is bid and ask? All the different market orders or order types. So I'll be basically everything that I'm teaching Andrew, I'll be making into like 5 to 15 minute videos for YouTube. And that will be kind of the main course of content in 2023 on this channel. I think I'll still be doing these live streams. I'll still do the live streams. It might not be every single week, maybe every other week, as I really want to focus on as much trading education and really getting that evergreen content out to you guys as possible. But I love these live streams. They're so much fun to do. So we'll probably continue those in the future. Those were the two announcements that I had. Very excited for both of those, and a great way to start off 2023 with a couple new challenges, right? So now we get to not as exciting, the market action recently. So last week, remember, we had many news-driven events. Last Tuesday, we had the CPI come out lower than expected, so lower inflation. That's good. We gapped up, 3.5% or something, just uppercut instead of undercut. Uppercut the previous highs before selling off. So this, while we were up 1% on the day, this is a distribution day. People are selling into that pop, which is obviously not good, right? And then the next day, on Wednesday, we had the FOMC meeting. Federal Reserve raised interest rates by 50 basis points. That was expected, but the reaction was a little bit more aggressive to the downside, as the next day we broke under the 50-day moving average on basically above average volume and saw that selling continue Thursday and Friday. Today we did gap down as well, but eventually closed basically flat on the day. We are getting pretty extended to the downside, and not to say that we can't extend further. I think that's entirely possible, but if we're playing a game of odds, I have more of an expectation of a day or two bounce up, kind of shake out the people that got short way late in the trend. Again, if we want to short and we want to short heavily, we want to do so at those turning points where we break under key moving averages or round numbers. not after 5 days of intense selling with major market stocks like Tesla and Apple breaking down, right? We don't want to be chasing short entries to the downside, just like we don't want to be chasing long entries to the upside. So pretty extended to the short term, under all the key moving averages, not great action. SPY, basically the same story, eventually failed that at that 200-day moving average. We did close slightly below that on the CPI day, and then big sell-off through the 50-day moving average, closed up 0.1% today. SPY was acting much better than QQQ because it's not as tech heavy, but recently energy stocks have started to roll over as well. We had one that I'll talk about in a bit. I did take a trade today on one, but overall I think energy stocks are pretty weak. After a bounce, they look like a potential short to me. The ETF, growth ETF IWO, this is something that I always keep track just in case we have any new viewers coming in. This is what mostly tracks like how I trade. When the IWO is in a nice clean uptrend, it's very easy to make money with my trading style, in like the CanSlim trading style. I'm not saying I do anything super unique in trading, but when the IWO is a nice clean uptrend, trading becomes very easy. When the IWO is in a nice downtrend, either be short or in cash. And with this type of action, gross, you want to sit out until you gather evidence. So you're starting with very small positions and only scaling up as you gain traction on your trades. Choppy environments are the worst to trade in because they keep sucking people in, and then as you build up exposure, then you get another leg lower. So this was kind of a nightmare of a couple weeks of just chopping around that 200-day moving average, and then it eventually broke to the downside, which is a much more stress-free environment for me because I just go to cash and then we can get back in when the market finds its footing. Final ETF we'll cover is ARKK. Made a new 52-week low yesterday, made another new 52-week low today. Majority of that is because Tesla continues to sell off, and Roku hit new 52-week lows, I believe today. Let's see. Yeah, Roku hit 52-week lows today. But the big thing that I want to cover with ARKK is Tesla. And I don't do this to rub anything into anyone's face. I've had major losses as a trader when I first started off. I still make trading mistakes to this day. That's not what I'm trying to do here. But I want to be very honest with any new traders coming to the live stream that if you look at Tesla and you think what's happening is impossible, you can't fathom that the stock is now down 67% off its highs. You need to do more research in the past. Go back to the last bear market, like the last true bear market, 2008. The 2020 bear market was so quick, I don't really count it as a bear market. 2008, go back and look at what were the leaders in that market cycle and how long did it take them to get back to their previous highs. Or look from their highs to their lows. Go back to 2000, those types of stocks. Mark Minervini has a rule. Do I have Minervini's book here? Yes, I do. Minervini has a rule. If you don't have this book, I highly recommend it. It's called the 50-80 rule. And the rule states that after a secular top gets put in by the stock, so a major top, 80% of stocks will decline 50% from their highs. And 50% of stocks will decline 80% from their highs. And that sounds insane until we go through the stocks that were darlings in 2020, like Carvana. This chart looks so insane. Carvana, which was down 99%. Roku, we can look at weekly charts. That went from what, $4.60 down to $40. That's an 80% decline. Redfin, Zillow, Zoom. It doesn't matter who you are. When you top and put in a major top, 80% of stocks will decline 50%, 50% will decline 80%, and I believe he said the average was around 73%. So with Tesla down 67% from their highs right now, has another what? It's not 6% because it's from this point. 6% from their highs, it has another 6%. But 6% from already something that's cut in half is at least 12% more to the downside. So we do need to be, we need to understand the history of the market and history of market cycles, because if you saw like a giant dip in Tesla, you would think, oh, I buy the dip. That's what I was taught in the previous market cycle. That doesn't work in a bear market where the major indexes are in a downtrend and the Fed is tightening liquidity. This was like the main point in time where I was like, Tesla's in big trouble. We broke under the 50-day moving average and the 200-day moving average on above average volume these couple days in late September, when was that? It wasn't on above average volume, but heightened volume, middle part of September 22nd or so. But then we get this weak volume rally up to the 200-day and the 50-day, which were right on top of each other, and no buying support came in to push it through that level anymore. And when you failed at that level, it failed on above average volume. And that's a huge sign that a stock's transitioning from its stage 3 topping phase to the stage 4 decline. And we don't want to be involved in stocks in stage 4 declines. Now, just like we don't want to buy stocks that are extended to the upside, this is not the ideal time to start shorting Tesla, right? We had multiple opportunities, a failure at the 21 EMA, a break under 200, a retest of 200 and fail, a retest of 200 and fail at 198. Those were the times to short Tesla, or even like a break into new lows with a tighter stop. But we're so far extended to the downside, we are starting to see volume pick up, and pair that with the indexes as well that are kind of extended to the downside. Not overly extended, it could get worse for sure. But if we're thinking in probabilities, is this the time that we want to start shorting Tesla? No. I want to see, just like we saw up here, a weak volume rally, and up here and up here, a weak volume rally into the 21 EMA that fails and then breaks to the downside. That would be a potential short area. We don't want to short. Leif Sereda says it's shorting in the hole. We don't want to do that, just like we don't want to buy extended stocks. Another mega cap stock that I'm getting very worried about is Apple. This 140 level was kind of a line in the sand for me that the market was more likely to roll over. Again, there's no absolutes in trading. There's no absolutes in the market, but we do want to kind of create scenarios that we can execute on. Say like, if this happens, then I do this. If I get more feedback, I reverse that decision, anything like that. So this 140 level, we came down to it, bounced, and then broke through cleanly on the 15th. That was not a great sign for the market. Apple's now back to basically its previous lows. 129 is the low. It bounced at 130. It undercut 130 today. Again, extended from the 8-day EMA, 3.7%, extended from the 21 EMA, 6.5%. So that's a pretty quick and steep decline. But on a weekly chart, this looks like it's a bad heavy volume week away from breaking into stage 4. It doesn't have to do that, but if we're looking and thinking in probability, we have rallies up to the 40-week or the 200-day moving average that fails, and now volume, all the heavy volume weeks, except for one in the last, 10 heavy volume weeks, have been distribution weeks. That's not a good sign. Doesn't mean it has to break down, but if Apple breaks to the downside and has a Tesla-type sell-off, the market's not going to be able, that market environment would just be such a mess to trade on the long side that it would not be worth it. You definitely would want to be trading with the trend, shorting stocks, shorting the indexes, something like that, or just sit in cash, enjoy the rest of December, enjoy the first part of next year. You don't have to be trading every single day. All right, so those were kind of the few stocks that I wanted to cover. I did take a couple trades today, so just being fully transparent with that. And I wouldn't have taken any trades today if I didn't enter the U.S. Investing Championship, and I wanted to kind of basically practice being aggressive at potential market turns, oversold bounces, stuff like that to get a little bit of an edge. So what I did was right at the open, we had that gap down. I started a 10% position in TQQQ, which I built into at later on in the day after, can I just do a 1 minute? We had this rally up and then put in a higher low. So as we kind of broke out of this area, I added to it. I got it up to about a 25% position, but I sold 5% right at the close there. So that's about a 20% position. I also, this is the one oil and gas stock that I had been watching still, and I did take this trade today. Only got filled in one of my accounts. It was a 20% position. Thankfully, it was my larger account. It was my Roth IRA. But got filled a 20% position right at 1026. I think my entry was actually like 1024, but this stock, massive power, pulls into the 21 EMA, finds support right around there. It does close slightly under a couple days, but incredible relative strength lately. Tightens up 3 days above $10, or I guess 2 closes above $10, but price action all 3 of those days above. And then we just opened right on the pivot and got going. And this is something that I keep stressing in like live streams and videos is we don't want to be buying 52-week highs, and in bull markets we do want to be buying 52-week highs. That's a great time. Liquidity is coming into the market. In bear markets where liquidity is coming out of the market and a majority of people have been losing money all year, they're going to look to sell into strength much, much quicker to nail down profits, especially at the end of the year where there's some people are fighting to keep their jobs, so they want to definitely nail down some profit. And we get a rally right up into the previous high here at 1020. The high today was 1025 or 1125, 1125. So if we go just into a 1 minute, we'll go into a 5 minute chart. So we see yesterday's action. So see how clean this pivot was? Like it was do or die right away from the start. And it's one that broke out immediately. So this was a 20% position. I sold about 20% of that. So what would that be? Like 5% of my total account into this first move, like the first 10 minutes, 15 minutes, something like that. And then I did take off 50% of the position right at the previous high at 1120. So now it's only down to a 5% position. It doesn't really matter. The profits have been made, but my stop's at the low of the day here for NINE. And then this is one that I chose for, no pun intended, for the Wolf live stream on Twitter that I do every Monday after hours. We pick 2 stocks and talk about market sentiment. FOUR, improving fundamentals, accelerating the last 2 quarters, so not quite a code 33 that Minervini looks for, but 43% to 69%, so earnings per share accelerating over the last 2 quarters, sales accelerating over the last 2 quarters, after-tax profit margins accelerating over the last 2 quarters. So fundamentally, all working out. This is a stock that everyone had on their watch list as it was battling this 200-day moving average. And after the second time that it just chopped like above it and then below, I was like, I'm not gonna mess around with this. I'll wait till it gets like cleanly over and we can build the right side up a little bit better. And eventually, like it did fail with the market pullback and just shot right through on earnings, up from 36 to 54, and then higher low. But really what it did the last week while the market was selling off caught my eye, and it basically highlighted as if I'm going to trade anything on the turning point of an oversold bounce, this is the stock that I want to try. Like every stock, it gapped up on CPI numbers, pulled back, had a positive day up 1%, not as important. But from there, the market sold off aggressively. But this had high closing ranges on every single day, and as it pulled back, it held $50. The lowest it got was $50.06. So we're respecting a round number. This volume, we saw a volume increase on the sell-off on a majority of the stocks in the market. We had lighter than average volume and constricting volume as it pulled back. We respected the round number. We have the fundamentals. We don't have the group strength. That's the one thing that, like, you could size it up a little bit better if the whole group was working, but 20% in a bear market at a turning point, like I'm practicing being aggressive, that still felt a little weird to me. But I took this trade with a break over yesterday's high, 52.46. This one wasn't acting super well in the morning, but got going and then closed right at the high of the day. So I didn't take anything off this trade just yet, but I do like, we get this gap down. This is today's action. We gap down and then we take out 52.46, whatever the high was there. And then after we do so, after we get a real rally going, we pull back into that area and find support. Like one candle undercuts it by a couple cents, but really buying support came in, and then we have that nice close. Does this fail on me? Maybe. But my stop is under the low of the day. It's about a 3% stop. We'll see how it gets going. So those were the 3 actions that I took today. Again, I'm being more aggressive because I'm practicing for next year, but Overall, again, the market a little extended in the short term. It could still go get worse. Like I could be stopped out of everything tomorrow. And I'm really only expecting maybe a day or two type rally into the 8-day EMA before stocks like Apple kind of bounce and then roll. Tesla has some sort of bounce maybe to 150 and then rolls down, something like that. I'm not, like long term, not feeling bullish at all, just trying to play a counter trend rally. Okay, so another thing I like to do is go over just the 12 stocks on my potential market leader watch list. I'll do that a little bit quicker so we can get to watch list stocks and then any stocks that you guys have as well. ABBV, I put this on today, replacing ON Semiconductor. This stock traded terribly throughout this whole year. Like relative strength wise, it's been doing okay, but as a swing trader, does not respect any moving averages, does not trade orderly, so doesn't fit my personality as a trader, so we can just pass on it. But ABBV, nice big cup, pulling in on the handle to that 21 EMA and the 160 area. We did undercut 160, but it's not the worst thing in the world. Or did we? 160.07, 160. No, we didn't. We held 160. So either way, pulling back to the 21 EMA, volume, except for the quad witching on Friday, was lighter than average, so all good there. Not doing anything too bad. AEHR, this is going to be a watch list stock for me. Again, trying to be a little bit more aggressive than usual. Coming into tomorrow, giant cup, working on the handle here to the 50-day moving average. This is another one. It breaks into 52-week highs and then immediately reverses. So we don't want to be buying 52-week highs in a bear market. Those are our sell signals. Like once we get up to that area, at least trim partial positions into strength, because this is more of a singles and doubles environment. Unless you're trading the downside with a longer term time frame, not quite me. But makes a new high, immediately reverses, fails the 821 EMAs, respecting the 50-day moving average pretty nicely here. Volume is starting to tighten up. Price is starting to tighten up. This is kind of a do or die situation. We should be, if the market environment improves, I don't want to give this stock any excuses not to break out of this consolidation tomorrow. If it doesn't while the market starts rallying, it's not a great sign. But it hasn't done anything terribly wrong just yet. I mean, this has had a monster second half of 2022, going from $6 to $28. Some pullback is, especially as the market's doing what it's doing, completely fine. Now, I say like the chart is completely fine. I would be managing my risk way differently. Like I'm not just randomly buying and then saying, Nick said that the chart still looks okay. It's intact, so I don't have to use a stop loss. Like no, use a stop loss. We still want to be keeping things tight in this environment. Celsius, kind of similar, big cup, maybe another like handle here before we get going. Let's see if we could take out that 21 EMA on any market oversold bounce. CPRX, I didn't see the news today, but monster price action, closed right near the high of the day on above average volume, making new 52-week highs. This is why this is a stock on the potential market leaders list. One that I've traded a couple times, but didn't get this move. Now it's a little extended again. We don't want to be buying at 52-week highs. DGII might be taking this off the list in a little bit. It has the fundamentals, it has the group strength. I want to see like, we've closed under the 50-day for a couple days now. Can we like build a base out here, or do we continue to fail down to 35? So no setup to trade at this point. I'm a little reluctant to take it off the potential leaders list. Enphase bounced at the 50-day today, closed middle part of the daily range. Overwatch stock at this point. The other solar stock is First Solar, which does look a little bit like it's acting more orderly, but these are a lot of high upper wicks into the 20-day moving average. If you had that, not the 21 EMA, but the 20-day simple. And like, I feel like on a market bounce, this might just like take it out and then reverse, but I don't know. I know solar is still the 7th strongest group in the market. I am just feeling like this has a little bit more to really like tighten up before it's a quality setup. EXTR, Another stock that broke under the 8 and 21 EMAs, tightening up. I think this is a double inside day. Let's see, low 42, low 40. No, so not quite a double inside day, but you do see price contracting over the last 2 trading days. But yeah, and I don't know if you're just buying a random break from there. What else? We have GFS. This is another stock that is on the cutting board, might take this off. Fundamentals super strong on this one. Earnings per share, sales growth, all that good stuff. Semiconductor stocks are starting to roll to the downside, which isn't a good sign for the overall market either. Broke the 50-day moving average. We got the 200-day. We'll see how that handles, but not loving that price action. PI, the one semiconductor stock that is actually holding up pretty well from my watch list. It's closed right on the 8 and 21 EMAs today, up 1.5%. Still holding this monster gap up on earnings per share, 950% earnings per share improvement, 51% sales improvement. So PI is the one semiconductor stock that I'm still kind of keeping tabs on. And then RYTM, another biotech stock that had a nice day today, up 6.8%, closing in the upper half, or basically right at all-time high, or not all-time highs, closing at the highs of the days. And then SMCI, I believe this was added to the S&P small cap 600, something like that. Had a nice gap up because of it, 6.4%. Still, the chart's all over the place. We need some tight price action before we can trade it. All right. Watch list stocks on the long side. We covered AEHR. I want to see this zip out, taking out yesterday's or today's high on any market strength. If it doesn't, I'll just cut the trade, especially if it breaks under the 50-day. Definitely not holding it after that. This is a stock that, like, when it does pop, it has a lot of power to it, so trying to be a little bit more aggressive than I would be. ARHS, this is a stock that's been on my watch list for a long time, and I know it's like a furniture stock, not the strongest group, but fundamentals are there and improving. Relative strength is there and improving. Pulled back to the 821 EMAs, had a little shakeout under the lows of the flag, or the last like 6 or 7 trading days, and then closed in the upper half of the daily range, up 0.5% today. We'll see if this just takes out today's high, 970, and then can zip through here. That's ARHS. We have Crocs. This is one that I was watching and really wanted to trade yesterday, but the market environment was just so weak that like it was up, I think like 2% while everything else in the market was down. And eventually the market saw that people were losing money elsewhere, so they had to sell their winner down a little bit, but still not doing anything too wrong. Today was up 0.7%. This is right on the 821 EMAs. Potential trade tomorrow, just taking out yesterday's high. Again, this is if you're being aggressive, trying to trade oversold bounces. If you just want to enjoy your last 2 weeks of this like terrible bear market that we've been in, just take some time away from the screens, spend more time with family, friends, do post 2022, like trade, what am I trying to say? Like go through your trading journal from 2022, get ready for 2023. You don't need to be trading in this market. ESAB, this is a machinery industrial stock, 11th strongest group, so it does have the group strength, has the relative strength as well, screaming higher here. IPO stock that could use a couple of days of like tightening up above the 8-day EMA, allowing that 21 to catch up before it's like an A+ setup. I mean, no A+ setups are happening in a bear market, so I shouldn't even say that, but like we've had some heavier volume as it pulled back in, so I kind of expect this like one more pullback, allow that 21 to catch up. So maybe this is a better trade for next week. That's ESAB. 4 we covered in more detail. If we just like, if the market pulls back and this pulls back with it, and it can like get around $50, you got that 21 EMA as well, then your risk reward, your stops under the 21 EMA, that's at 49.40. If you could get it close to $50, then I'll be shaken out, right? I'll be shaken out. But if it holds 50 or comes into 50 and you see buying support coming in, then you can get your stop loss under the 21 EMA. That's a very tight stop there. MGNI, this is one that like, I don't know, lots of overhead supply, but does have the power off the lows, had One day up 65%, the next day up 21%. And if you look at all the heavy volume days recently, they've come on days where the stock is being accumulated. You see high closing ranges on each of those days. And then as it pulls back, it pulls back on below average volume. So there is a lot of overhead supply that could cause choppy trading, but this is one that when it does go on the day, it has a 9% move, a 6% move, and a 6% move, like back to back to back, showing that it is being accumulated by someone, or at least like major short covering on the stock. But yeah, short interest is 28%, so that could be part of it. So we'll see. Over today's high, 1125, stop, probably an intraday stop there. MNSO. A couple of these are Chinese stocks, so if you don't trade Chinese stocks because it has additional like overnight risk, I completely understand that. I will always lighten up my positions when I'm trading Chinese stocks. I might put on a full position like the day I'm trading them as they're breaking out through the buy point, but I try to scale and bring that position size down because there just is more overnight risk when you're trading a Chinese stock. But MNSO, nice move off the lows here. About 200% gain, pulling back in the 21 EMA. Nice shakeout today under the lows and then closing right at the high of the day, up 4.7%. A gap down to start, like a slight gap down to start, and then take out today's high and the close, something I'm watching. MOD, this is an auto truck equipment, 80th out of 197. This group has had a couple like wild runners, and I don't conceptually understand like why that would be. Like I don't understand the theme, but the theme is there. The stock's from $8 all the way to $22 from the high. Had this really nice shakeout day, and like I wouldn't be mentioning this stock after like two big moves if it didn't have the shakeout day to really clear the deck of any weaker hands or short-term traders like myself. I would absolutely be shaken out on this move. But we do have the shakeout day and a very strong closing range. It was actually up on the day, up 1.5%. From there, we break over the 821 EMAs and then very, very tight action. So with this, you're going to tell right away if you're right or wrong on the stock. And as the market was pulling in, we were just seeing tight sideways action. So the relative strength line got into a nice clean uptrend there. So that's MOD. Does trade a little bit light, less than 500,000 shares and about $20 stock. So if that's too illiquid for you, I understand. We'll go to the next one. Another Chinese stock, Momo. This is one got up, let's see, up 29% on 980% the average daily volume, then 31% on 1500% the average daily volume. Nice flag here. A lot of Chinese names have found a bid and are coming off their lows, like Alibaba ran into the 200-day, but it's still well off the lows. I think NEO came off the lows. Not super well, but BILI is another Chinese name that's trying to get going. A lot of overhead supply in these names, so not super long-term holds, but yeah. So Momo bounced at the 8-day EMA. Could use a couple more days to tighten up. And then last two on the long watch list. I'm trying to rush through these. If you guys have any trading questions, drop them in the comments. I'll pause right here because any trading questions that we cover or any chart requests that you guys have are more important than the charts that I'm going over. Again, this market is very, very difficult to trade in at this point. So if we can use this time to improve on risk management or anything like that you have questions on, that's probably more important. RXDX, I did like how this shook out yesterday. Kind of took out the lows of the flag except for the 2 days that it was being accumulated. This is one that I completely missed because it had such a poor closing range on the day that it was up 165% that I didn't have it on my focus list, and it gapped up over 100, held 100 on the pullback during the day, 154, and then zipped out 22% from there. Kicking myself a little bit, but not chasing it higher, letting it pull back, tighten up, and we'll see how this one gets going. This is a biotech stock. Biotech's kind of similar to Chinese stocks. Like you have to size them down a little bit more because there's more overnight risk. I'd say even more overnight risk than Chinese stocks. We've seen a couple recently just like implode to the downside. So I'm never taking a biotech stock. I'm never holding overnight a biotech stock over a 10% position, especially if I don't have any profit cushions. So those, one more. And my second pick for the Wolf Twitter space was YMM. This is in computer software enterprises. That's a weak group in itself. But this stock did subtly put in like a higher low later on in the year and then rallied from 458 to 958. So about 100% move up there. You see to the left of the chart, some overhead resistance along with the market selling off. So it makes sense that we paused and pulled back, but we've only had a 15% pullback from the high. Now, this doesn't qualify for a high tide flag, 100% or more, or 90% or more in 8 weeks or less, and then a pullback within 25% from the highs. Because we have the overhead supply, like you really want the pull of your 100% move to not be dampened by overhead supply for a high tide flag setup. But it's still a setup that we can trade. Nice move up, it's just more failure prone. Pulls back, very, very tight action these last couple days. Again, this is an $8 stock, so if that's too illiquid for you, don't blame you at all. Just pass on it. Just sit out the next couple weeks. But volume declining, price tightening, we should know right away if we're wrong or right on the stock. And then we're pretty extended to the downside. We don't want to initiate short positions right now that we're not going to close within the day on the initial move. But a couple of stocks that I'm looking at shorting are AMR. This is a coal stock that has had just study this chart because it breaks out bases, breaks out bases, breaks out bases, and then I forget, was it 4 or 5? Minervini talks about the last base. You get more wide and loose action. You tend to see distribution. You see a bunch of heavy volume selling weeks, low volume rallying weeks. All the weeks that were up on price were on above average volume. And you're starting to see that distribution, wider, looser price action at the top. And this is, at this point, earnings per share is starting to decelerate from over 1,000% year over year to only up 220% year over year. So this is where everyone comes around to thinking that the stock is fundamentally strong enough to invest in. They've seen the price action and it's consolidated long enough, but we're really starting to see deep distribution, and this looks like a VCP setup, right? That could work on the breakout through 175, but it didn't. It failed through the 50-day, failed under the 200-day, and then today tried to rally but closed back under the 200-day as well. And there's other stocks in the group like CEIX. This is actually a stock that I was watching to the long side today. I didn't take the trade, but opened right at $70, right at the 21 EMA, and just zipped out of there. And stocks like this, it's holding up the group relatively well, but if we see those breakouts fail, if BTU reverses to the downside, AMR is the weakest of the group and has had a giant run from $2 all the way up to $140. So a lot of air to let out of this bag if we do see some major distribution here to the downside. CEG broke the 50-day moving average, consolidating here. This could go either way. Coin, along with Bitcoin, just looks pretty weak to me. Pretty extended the downside already, but Bitcoin's chart looks like it could just break down at any second. And then getting into some of the oil and gas stocks like DINO, this had a major move down to the 200-day moving average. I kind of want to see another couple days where this tests 51, 52, just to shake out anyone that was short. And if I was short this on the break and then it found support at the 50 or 200-day, I might still keep the short until it reverses trend. So what I'm trying to see is a trend reversal, shake out the shorts and allow them to take profits after a nice move to the downside, and then short as we break the 200-day. CHEF, this is kind of all over the place. Let me just pass on that. LNTH, this is one that was a potential market leader earlier on in the year, was one that was just so frustrating to trade, kind of like ON Semiconductor. I never traded this stock, but I had this on a watch list almost every day this year. But eventually it breaks under the 50-day moving average on above average volume. We rally up to it, fail at it, rally up to it, fail at it, cut through the 200-day moving average on above average volume. And this is on earnings per share over 1,000%. So again, technicals will lead fundamentals. That's why we want to buy stocks if we're like looking to invest in the long term, we want to be buying stocks in uptrends with strong fundamentals, improving fundamentals, but we're going to manage our risk based on technicals and technicals alone, because this stock is, like, we can look at Tesla. Tesla has earnings per share growing 69%, sales growing 56% year over year. It's down 67% from their highs. If you're not managing your risk with technical analysis, you need the stock to now triple to get back to break even, and that doesn't make sense to me. Good to you. NFE breaks the 200-day moving average, looking for a weak bounce to the 200-day before shorting that. Roblox, weak under all the key moving averages. Let's see it come up to the 8-day, maybe even up to like 29 and then fail. And Teladoc and you, whenever I talk about short setups on MarketSmith, it's like whenever you have to like really squint to see the chart, it's probably one of the weakest stocks in the market and one that we can short. All right, those are all the stocks that I wanted to cover. I felt like I was talking in 2 times speed. Let's see what questions you guys have. Good morning from Malaysia and Trading IQ. You two are always in the chats. I always appreciate it. Let's see. Markets can stay irrational longer than you can stay solvent. Absolutely. Like, the key to investing well and trading well for the long term is making sure you don't take any large losses. When I'm talking to Andrew, my friend who's learning about trading, I said there's only 4 outcomes that should ever happen in a trade. A big winner, and I think this is Mark Douglas, so I don't want to steal this, but a big winner, a small winner, a break-even trade, and a small loss. Those are the only 4 outcomes that should ever occur in any one of your trades. And if you do that, you're going to be a successful trader over the long run, because you're either going to take tons of paper cuts, which will get you enough time in the market, enough at-bats to really understand and go through your process and improve it for the next bull market, or you're going to be just making money and doing well. But we always want to avoid the 5th outcome that should never happen, is a large loss. Now, that would only occur if we had a position and it gapped down outside of our control, right? And at that point, you just sell it, you lick your wounds, and you lose the position. That has happened a couple times, and there's no real way to avoid that one situation. But if you're adding to a losing position, if you're not using stop losses, if you're over trading in a poor market, like, all those things can be controlled, and you should eliminate those, so we can only focus on the 4 possible outcomes of the trade: big win, small win, break even, small loss. All right. Yeah, Amazon dropped like 97%. We can take a look at Amazon's chart in 2001. So people always bring this chart up. Whenever I'm saying like you should cut your losses quick and you shouldn't invest in stocks in stage 4 downtrends, they go, well, Amazon lost 95% and then went on to be a massive winner. Like, it's like they're using the one example and saying like, yeah, everything else that you talk about with risk management is null and is dumb because this one stock came back to lead. But if we look at a weekly chart and then just go kind of like week by week, we can get back in the stock on the stage 2 breakout, right? It fails at the 10 and the 50-week, 10 and 40-week moving average and sells off on above average volume, right? That's like the main sell-off. But kind of like Tesla did, where it broke the 10, rallied up to the 10, the 40, and then failed on above average volume. This is your sell signal. Like, there's no way you should be holding through a base failure at this point. Let it flush down to, what would it go down to, $5, whatever? And then it comes through the 10-day or 10-week, comes through the 40-week, bounces around. And then I believe this was an earnings move, or an earnings gap up. Can we go to a daily on that? It doesn't show, but I believe this was an earnings gap up, 12% or something. And then it gets back into an uptrend, and you could trade the uptrend. So just because it came back doesn't mean like we could never trade it if we sold it. We can always buy a stock back. Always, always, always. So we manage our risk first. 9 was also on your radar, along with YMM. Also watching Manu. So with MANU, I don't know this to be true, but I heard this was more of an acquisition play. But I also heard the same about, what was it? And there's another stock that I thought was an acquisition, and it didn't end up being one. But I try to stay away from any like news-driven stocks. So if that is the case, look into that. If that is the case, then for me, I try to avoid those. TNGX. Oh, look at that. Biotech, a little bit lighter, but trades orderly, which I like. You got to match the personality of the stock with your trading style if you're going to have any success. 803 potential entry point there. Support at the 50-day. 8 and 21 EMA right on top of each other. Biotech, you're sizing it lower. Thinner traded biotech stock as well. Like this could, like 200,000 shares on average with $8 price. Like this could just like quickly crush down 20%. Even though it has traded orderly this last couple weeks, any stock like that does have the ability to just have like a flash 20% crash. So trade with caution for sure. ATAT, I was watching the stock today. I didn't take the trade. This is another Chinese stock, IPO. Like beautiful action though. Took out the pivot from yesterday, rallied up, pulled back, so squatted as the market was squatting right off the open, and then found support above the previous pivot. So buying support came in, supported the action. We had this nice flag and then broke out later on in the day. So really nice action. It was on my focus list. I just didn't trade it because I had enough exposure with the other couple names that I traded. NWTN. Huh. Yeah, we'll see. Let's see, how does this trade? A little wicky for me, but could work. And then, yeah, ACLX was beautiful. Like this is a stock that had been on my watch list like all throughout this range, and then broke out broke out without me. Then basically undercut that breakout area. I forget the news that happened here, but strong accumulation. High closing ranges on above average volume, sign of accumulation, and in a bear market, that's phenomenal. Nice move up 8.5% today after a shakeout to the 8-day yesterday. All right, we got 12 more minutes. If you guys have any other trading questions, anything that you guys want to talk about, I'll stick around for 12 more minutes. Could run the CanSlim scan, see what pops up. Got 19 names here. AGYS, nice. TGLS, nice shakeout under the 21 EMA, strong closing range. Building construction, that group also is surprisingly strong. Like, I keep hearing housing's going to crash, and maybe this is like, oh, that's laminated glass. I don't know. ACLS, semiconductor stock, undercut the 21 EMA. This is the one that everyone was watching the breakout of 80. I'm like, let's use this as a data point. Let's break through 80 and see if it actually holds that breakout. And with that market pressure, it didn't. Are you into the bigger companies that move slower, such as CAT and TCC? Not really. Like I have noticed CAT showing good relative strength lately. In inside candle today, has the fundamentals, got the group strength, machinery, mining, 6 out of 197. On a weekly chart, this is starting to shape up as well. You have the first big kind of low, and then we undercut that low. So we shook out all the weaker hands and then popped right up the right side of the base, and now spent, 6 weeks? 1, 2, 3, it tells me. 6 weeks, depth only 6%. That's extremely tight price action and does show accumulation of the stock. So it's not one that like I will trade in my personal account. I might trade it in like my parents' account or something like that, just because it's a little bit slower moving, I can manage my risk with stops and kind of like look at it at the end of the day, stuff like that. But if I'm going to be putting exposure into the market, I do want to see like a quick move in my direction almost immediately to either move half my stop to break even, sell some into strength. But this stock's doing nothing wrong. So it is on like the world of stocks that I'm watching. I don't know what TTC is. Yeah, we came right back up to previous highs. I would kind of like to see like a shakeout week in here. Oh, and we have earnings tomorrow. So I guess we'll see how earnings goes on that. Speaking of earnings, Nike up 12.7% after hours. So that's 116. Where does that put us? Over the 200-day moving average. Dang. That's nice. Obviously, we never take a position right before earnings, but it's good to see. Like, I'd rather see more stocks break to the upside. It's way, way easier trading in an uptrending market. Just a little surprising. And what was the other one? FedEx? I think they were up too. Yeah, up 4.8%. 172. That puts us back above the 821 EMAs along with the 50-day. Still below a declining 200-day. So nothing crazy there. Want to see what some of the other mega cap stocks are doing. Netflix, I think this gap down because they were like returning advertising dollars that weren't spent or something like that, down 6.6% or 8.6? 8.6%. Down to the 50-day. Found support there, kind of with the market slightly bouncing. We'll see if that has run its course. Thoughts on ABBV? Yeah, so I put this on my list of 12 potential market leaders. I just did that today because I was taking out ON, but ABBV, kind of adjacent to that biotech group, which is holding up pretty well, but big cup, really orderly pullback, below average volume on the pullback, except for the quad witching day. So take that with a grain of salt. That's not a credible move. And we've held 160 on the pullback. We've closed either at or above the 21 EMA. This is one that it's not as fast of a mover, but it does tend to trend very nicely. So it's one kind of like cat that I could trade into my parents' account, not have too much worry about like position sizing it right, where I put my stop loss, stuff like that. And stocks like that have a purpose. So nice big cup. What was it? 24% depth, 5% depth in the handle. Not bad, not bad. All right, what else? Trying to think. We talked about Tesla. We saw Apple. Take a look at Google. Yeah, a lot of these mega cap stocks, like one thing that I keep talking about, and Sunil at Traderline brought this up too, was it feels like we're in the opposite of trading in 2021, like towards the end of the year, where in March or in February of 2021, that was when the market got way too extended. All the growth stocks had a major pullback or crash, and a lot of those growth stocks like didn't actually recover. Roku, Peloton, I think they put in kind of like double tops eventually and then crashed. But that was the first like, hey, the party is ending. And then all throughout 2021, less and less stocks, GM, I forget what it's called, but less and less stocks were actually participating in the market rally. The indexes were continuing to rally because stocks like Nvidia, Apple, Amazon was so-so. We had Shopify, did break, try to break out later on in that year as well. But it was just the mega cap stocks that were eventually holding the indexes up till they saw their own distribution cycles. So like as we were seeing more and more of those like 2020 darlings and the growth stocks in 2021 crash, the number of stocks that were participating in that rally were getting smaller and smaller and smaller. So it was getting harder to make money on the long side unless you were trading those 5 mega cap stocks. And now we're kind of in the reverse of that, where like the growth stocks bottomed first, we're starting to see a lot of them climb the right side of their base or even break into new 52-week highs, but we're seeing the mega cap stocks right near their lows. Google right near its lows. Apple right near its lows, and looks so dangerous here. Like if Apple breaks like the 130 area, and I know it undercut it today, 129.89, but like if it full on breaks it on above average volume, that's just a terrible sight. What else? Meta had a kind of already bottomed, had a rally. This could fail. Google, Amazon. Amazon made 52-week lows yesterday. What did it do today? Made another 52-week low before closing positive. But we're starting to see growth work a little bit better up the right side of their bases, trading, all that stuff. And it's really the mega cap names that are bringing down the market. Now, that doesn't mean that we want to be super aggressive trading these growth stocks right now, because until the indexes and the mega caps at least find their footing, people have a majority of their money wrapped up in indexes and these mega cap stocks. When everyone's losing money hand over fist, they're going to be much quicker to sell winning trades as quickly as they can to pay for their losses. And we need an environment where the indexes are in an uptrend for a really, really positive trading environment and a low risk, low stress trading environment to the upside. Now we can do these counter trend rally trades, stuff like that, but your expectations on your trades to the long side should be extremely compressed until we get the indexes and the mega cap stocks, not even like at least finding their footing trading sideways, but even better in an uptrend. mRNA breaking out. Yeah, so this is like kind of what I mean. Another stock that put in a low, undercut it, rallied, and now you see just a line across the top of its stage 1 base. It's starting to work to the upside. Last week we were on above average volume through that area. Only got compressed because the rest of the market sold off so aggressively, but does look like it's starting its stage 2 uptrend from here, which is positive, right? We want more stocks climbing their right sides of their bases, going into stage 2 uptrends after consolidations. Shopify is another one that like it's on the cusp of it, or it was at least right around $45, but we want to see a break above 45. We don't need to catch that first move as it breaks out in a bear market. Like I've found myself struggling after I read like Minervini and William O'Neill, how they always talk about the best stocks in the next bull market will be the first ones to break into new highs as the bear markets are finding their bottoms, which is true when you go back, but you don't know when the bottom is going to be. So knowing that, like I was talking to Ross Haber at Trader Lion on Saturday, and he was like, you can miss the first couple, like you can be very late to the party, but as long as you know that the party is actually going on, when you start getting aggressive on the long side, you're going to make plenty of money. And that's how 2022 has felt for me, where like we've had stocks like Enphase, First Solar, SWAV. We've had stocks that have shown leadership characteristics, have made 52-week highs, but they're not long enough lasting. So you either need to just sit out in cash, study, which is completely fine, or you need to drastically compress your expectations to the upside on any of your trades. Or trade to the downside, short. But again, we don't want to be shorting stocks that are already extended to the downside. We do want to be shorting like the weakest stocks, but we want to wait for them to kind of bounce back with the market, tighten up, and then short the breakdown from that. All right. I think we'll end it there. Thank you guys so much for showing up. Again, 2 announcements. I will be competing in the 2023 U.S. Investing Championship. Looking super, very, very excited for that. And then also, I'll be teaching my friend very basics from the start, how to be a successful trader. So those videos will start coming out in the first part of 2023. I'm working on a full lesson plan for all of those. So make sure you subscribe, leave a like on this video so other people can watch it later and YouTube knows to push it out. Have a great rest of your night.